LIC reported a healthy AUM growth in Q1. Profit beat the street estimate. But let's go across to the editor-in-chief Nikunj Dalmia, who's in conversation with the LIC CEO and MD Siddhartha Mohanty.
Well, it gives me great pleasure now to bring on board Mr. Siddhartha Mohanty, Managing Director and CEO of LIC, to talk about how things have transpired for LIC for the quarter gone by, what is the path ahead, and what we should expect in specifics both for policyholders and also for shareholders. Good to have you on ET Now, sir. Thank you for joining us. Impressive set of numbers. I look at basics, which is that premium income of 15%. I look at VBN margin, which is improving largely because of product change mix, and non-par products are now really the main story for LIC. How would you summarize the quarter gone by for us in your eyes?
It's a post-listing, whatever directional change we adopted, and that is showing result. Quarter after quarter, that is showing result, and in past quarter, particularly non-par segment, we planned for 15%. Our original planning, non-par at that time, it was 7.12 when we are listed. So we planned we should achieve 15% in 2 to 3 years time. But good that today, Q1 this year, already almost 24%, 23.94% share of non-par is there. That has primarily happened because strategically we launched some non-par product, which got traction in the market, and our field force, they are also interested. And when I say non-par product, not necessarily it is only to benefit shareholder, because 100% profit goes to shareholder, but basically to take customer's interest. In non-par product, customer knows how much he is paying today, how much he will get back on maturity. So he is clear in his investment decision. So that's why we are getting good result. And my sense is current year, at least already we have achieved 24%. So 25 plus share will be non-par within AP. That will be there. And that will have also a positive impact on our margin.
And this is a good 2 years ahead of what you had initially indicated.
Absolutely.
So how did you achieve this?
No, we achieved because of all these product change,
Okay.
product mix.
Now, let's talk about something which is of immense market curiosity, the market share in policies. While it is still a respectable number of 65%, but it has come down from 67 to 66. Is there a conscious strategy?
No, absolutely. We focus of more number of sale, but margin 1-2% will be there here and there, but focus is how to retain that market share or at least grow by half or 1%. So that will be our strategy so far as policy, number of policy. But premium is concerned. So far as premium is concerned, we have regained market share. If you see Q1 of last year, we were having 61%. So this year Q1 64% in premium market share. And if you compare Q1 with March, Q4 of last year, it was less than 59, 58 point something was there. So this year we have achieved 64% in past quarter. So consciously, because initially we focused on margin and all those things which we achieved before time. So now again, we have to focus on top line without compromising bottom line. So first quarter has demonstrated that.
So can I say going forward, that would be the mix where the non-par business mix would be in and around 25%, and you would be focusing on the market share in terms of premium, which you want to maintain at 64 to 65%?
Absolutely, because non-par share of AP this year 25 and it will grow. Coming year, my sense is it will definitely grow because my commitment to my shareholders that margin around 25% margin will achieve by 2027. So unless we grow non-par beyond 25% of total share, so it will be difficult to achieve that margin. So my sense is by 26, 27 it will go to 35 to 40 non-par share of AP. So that will be there. So that we will also enhance margin from 16.8% last year. So this year I am expecting around 2 to 2.5, 3% growth over that, around 19 plus 20, within 20. That should be my margin. That is, we are working on that.
So while you are working on the new product mix, your margin from the new business still is at 14%. And do you see that improving also?
No, definitely there will be some improvement because margin depends upon products we sell. So now if you see, particularly within non-par segment, term products give good margin. And of late we have very recently we have launched two non-par product, term product, UBA term and UBA credit life, both offline and online, through agent and online. So these products are available. So, and already in few days we are getting good response for those products. So that will help in growing margin.
You're a listed company now, which means that every number you report is now really examined. Everyone is trying to look at trend here. Could you walk our viewers through in terms of the productivity gains and the employee productivity gains you've had in 2 years in LIC?
No, employee cost has gone down and operational efficiency, if you see, it has also gone up, particularly Q1 figure, if you see, total overall expense ratio as against 12.85%. In Q1 it has come down to 11.87%. So 98 basis point reduction is there. So that itself demonstrates operational efficiency has gone up.
You've gone on record and you've said that you want to professionally manage real estate. Now, what does that mean? How many branches do you have? How many branches could now be suddenly value unlock could happen there?
You see, if you see real estate of LIC, LIC is one of the largest real estate owners in the country. And definitely we want to get some value from these real estate operations. And when we say real estate, we bifurcate, which are owned by us, means own premises, our offices, our quarters, all those things. There are certain properties which are let out, which are lying vacant. So all those things we are now examining how to get best value from total real estate. And when I say value, not necessarily it means monetize or divest or sell, but also how to manage very professionally so that we get some value.
So what is the value of real estate according to you for
40,000
LIC?
crore plus will be the last, as per last valuation.
This was like a couple of years ago.
2 years before. So it will be now 50,000 plus crore.
So let's say you're looking at reduction in branch networks, you're looking at selling some of the branches, you're looking at reevaluating the rent. How will it work?
No, branch network and all those things will not come under real estate. Real estate means real estate which are of commercial nature. Branch office is our own office, we have to continue branch, but commercial nature real estate also is very large in LIC, which we let out, we get rent. So that has to be managed very professionally. So we are now examining what are the options available. We'll consult some specialists in this area and we'll come out with a concrete policy so that value accretion is there from real estate.
Your AUM growth is up 16%, which is, some would say, higher than India's nominal GDP. Will that trend continue of AUM growth at such a large base?
It depends how, because how market behaves and how everything moves, because as against 46 lakh crore now we are 53.58 lakh crore AUM. So more than 16.2% growth we have shown in Q1. And objective is next 3 to 4 years, I should not say 5 years, definitely in 5 years my objective is to make it 100 lakh crore. 1 trillion trillion, okay. Because it is already 58 lakh crore plus, 53 lakh crore plus now.
You're looking at doubling in 3 to 4 years?
Doubling in 5 years definitely will double, but how to reduce that in 4 years or 3 years and a half, something like that. So that is 1 trillion trillion.
But how will you achieve that?
So if you expand business, your income, everything will go up. So that is also one of the, of course, very ambitious objective, but it is achievable. It is achievable, it is practical.
But why, if you're in an expanding phase, margins are looking up, market share and digital productivity is kicking in, your VBN margins are still lower, even on a low base.
VNB margin, you see, when you stay in market, you compete in market, you should not only look at margin. because the margin long-term business also we have to look at, so that ultimately margin sustains. So what you are referring, because the margin only slight 20 basis points growth is there as against 13.7, 13.9, primarily because of product mix and product benefit. Because we enhanced benefits in certain products, particularly annuity and other products. So definitely when you enhance benefit, so that will have some impact on margin. So, and it was a strategic decision, because we have to stay both top line as well as bottom line. So focus bottom line, we have already shown what we have done. Without compromising bottom line, now also we'll focus on top line.
Looks like IDBI Bank disinvestment is moving the right way. In the past, you've said that you would like to maintain some stake in IDBI Bank.
Yes.
Have you changed your view there, or that still continues?
No, because you see, IDBI Bank is our number one bank partner, Banca. Banca Assurance, they contribute to highest to LIC. And we will continue with IDBI Bank. So whatever stake is required to maintain that relationship, that much stake will continue. And so far divestment is concerned, government will take a decision how much to divest, when to divest, all those things will be taken care by the government.
And what is the minimum stake which is required according to you for the relationship
There is no
to continue?
such regulatory thing, but something we should have some say in the bank.
You would like to have a board seat?
Board, absolutely. So
but what are you doing in order to improve that entire channel banker business? That's where LIC still really needs to move up, because your peer set has a much larger pie coming from that channel, so to speak.
If you analyze Banca as a channel, all other insurers who are doing well ahead of LIC, they are owned by bank. That is the material difference. Insurance companies owned by bank, thereby doing well than LIC, there is material difference. Here we are LIC only, we are depending upon bank. So that is number one. Despite that, I think our position 6th or 7th amongst all insurance in Banca. Yeah. And Banca has also improved. Q1 also some improvement as against last year, some improvement, some 20-25 basis point improvement growth rate is there Banca. But this year we have 87 Banca partners, but more focus will be on alternate channel. We call it B and AC, Banca and alternate channel. Alternate channel comprises brokers, corporate agents, insurance marketing firms, IMF. So this year we have given direction, you focus on these areas and you expand your resource through these people, these entities, so that ultimately business will also grow. And the objective is, of course, we are having that objective, 10% at least, Banca should contribute to the total kitty, but I think within 2 years it should cross 5%.
The productivity gains for LIC have come from the following. Digital efficiency has kicked in, digital business is increasing, new product launches, especially on the non-par, and then the bank insurance. What are the next leg of productivity gains coming from LIC from?
In next level, we will be totally digital, so that productivity also goes up. We are also into analytics and AI, because we will move with the time. So digital transformation does not mean only paperless, but beyond paper, whatever is required to grow market, to sustain in the market, to stay competitive, all those things we are going to embrace at the earliest. So those will also enhance our productivity.
The general view with a lot of market men is that LIC is still selling policies through the old school way, branch network, agents. How much of the new policy is coming from pure digital and how much is coming from the old channels?
A pure digital, you see, it is just beginning less than 1% now today, but we are focusing more and more, and these 2 plans we launched, those are also available through digital mode, UBA term, UBA credit life, both through agent one can take and directly also digital mode through our site also one can take. So focus, you see, in India, insurance is a push product. People now also, many people, unless you explain everything, and agent, there is a necessity of agency channel, and it will continue. In India, it will continue, even in developed countries also, majority is agent. Though digital is there, of course, here 96% I get from agent. In other countries, they get 40%, 35%, 60%, something like that. It may not be 90, but still they are a dominant channel agency, and that will continue. So focus will be our strategy without compromising on agency, because that will continue, and moreover that gives a lot of employment. 14 lakh agents, huge employment. They provide their family, everybody, they depend upon agency. How to grow digital channel? So that strategy we are working.
Okay. Let's broadly look at what is happening in the entire financial savings space. SIPs have started, banks are getting less liabilities, and money is moving into stock markets. Could that be a long-term challenge even for LIC?
You see, when you talk of LIC or for that matter any insurance companies, we compete within the domestic savings market. People have lot of avenues, opportunities to invest, and now if you see market, the way market is growing, and retail investors, they have invested long back, and the way mutual funds every month getting how much more than I think 20,000 crore monthly.
Crores, yeah.
So, and where they will park only in the market. So, but that will also be a challenge to all insurance company, banks as well. So, my sense is there should be some good balance. Market should grow, but insurance company, banks, everybody has a role in the total economy. And as insurance company, when insurance awareness goes up, because there cannot be any compromise on a life insurance. Life and life insurance, there is no substitute. So people definitely will have life insurance policy. Of course, they may choose from different basket. They may not go for pure saving or something like that. They may go for pure term. And our ULIP, because of market, our ULIP also going up. ULIP sell more than 145%. We have shown growth in Q1.
The numbers, yeah. 134%.
134% growth we have shown in Q1. So we have to work on that.
But is there a structural headwind now for the insurance sector? Because there was a time when insurance was always more like a protection plus investment product. By default, whatever your pool of saving was, that more than 20% was directly indirectly coming in insurance. And those tax advantages are no longer there, at least at 5 lakh plus. So is there a structural headwind now for the insurance sector in India?
I don't think so, because people who take insurance, they take insurance only for insurance sake. And a tax benefit, even that was also limited, not totally free, total amount will be. So tax will have not much impact. People will buy insurance, but which insurance product? Within insurance, composition of product line may change. Savings, term, annuity, ULIP, other products. So that composition may have some impact because of market, because of preference, consumer buying here. All those things will have definitely better, but as such insurance will grow.
But the fact that the tax 5 lakh plus law was changed, or those benefits were taken away 24 months ago, has that impacted that bracket of policy buyer?
For us, it was very negligible.
LIC was less than 5%, I think.
Very, very negligible. It did not impact much.
But the country is also preparing to move into a new tax regime.
Yes.
And the new tax regime means no exemptions.
Absolutely.
And that, in a sense, could also be a problem for LIC.
And for LIC, for insurance industry, that will not be a
that
problem.
Will be no problem.
That will not be a problem.
So you don't think a lot of money...
Because everything will be withdrawn. Housing loan will be also withdrawn. When new tax regime means no you pay, and tax will be rationalized. So I don't think it will have any impact on any housing industry or insurance which were earlier getting tax benefit. Initially there may be some impact, but gradually people will adjust.
2 years ago when we met and we used to speak to some of your predecessors, the first question was Adani, the last question was Adani.
Now you ask, so it is a matter of time only. You see, we always tell market, because LIC, as LIC, you know, historically, we never do any knee-jerk reaction to market. Market movement, no knee-jerk reaction, market movement. We have our strong research team. We continue our research. We sometimes take a contrarian view. People object. Market is falling. Why you bought? You made loss. This that. After 2-3 years, they appreciate is LIC took. Why
But have you booked profits in Adani now? You're still holding on to
We
it?
never made any loss.
But have you started booking profits?
At that time, I told we never made loss. It is different that share price has gone up. It comes down different. But book value never we made any loss. And now market, you know.
But you're not answering my question, sir. Have you started booking profits in
Booking
Adani
profit
stock?
also we do in all stock.
That's
So
routine.
this is not exception.
Okay.
This is not exception. Let me be very clear to everybody. We book profit in every stock wherever there is opportunity. You take any name. So we are person or company agnostic.
But are you looking at increasing your aggregate commitment to equities this year for FY25?
Every year we invest equity. Last year also
1.35
lakh something lakh crore. This year depending market movement, market situation.
But the number could be in and around the last year's number.
We have objective of at least some positive impact. Something again factor is market.
Health insurance, something where you've said that even if composite license rules are not changed, LIC will venture into it. Could that be game changing for LIC?
No, we are, because we now observe there is a lot of scope for health. Indemnity health. We are already in health insurance. We are selling a fixed benefit product, but indemnity health, which other GIC companies are selling, standalone health insurance. In that space, there is a lot of scope. So, and if you see distribution channel of those companies, most of my agents, they are selling those health insurance product. They are my agent because they can sell one life, one health, one non-life. So they are selling. So that advantage is there with LIC ready-made. Distribution channel is already ready. Only thing is that we have to think of how to grow, whether organically or inorganically. So we examined, if we do on ourselves, it will take a lot of time. Time, experience, energy, cost, all those things. But why we should not have a plug and play system? Immediately ready-made is there, have some stake, good stake, and enter into health space. Your agents will sell those products. So you are in a life, accident and health. Because already life and accident is there, so health. So that will be total game changer, and we are now examining, exploring.
But you would be looking at buying a, PSC or a state-run insurance company, or private is also up for grabs?
No, standalone health insurance only private.
Okay.
Standalone
Only private. So you'll have to buy a private health company.
Yes.
The government has consolidated the banking sector. 3 large banks, and then everything has come under the umbrella. Do you think the same needs to be done in the insurance sector? Maybe just 2 large players?
That government will decide.
But do you think it makes sense?
And that government, because everything government will examine and take a call at appropriate time.
You've given us a number as to where you want the number of 1 trillion lakh. That's the number which
is very ambitious. At least we are thinking of that thing at this stage.
LIC is clearly one of the cheapest insurance stocks anywhere in the world. I was looking at the numbers. Undervalued. Why do you think it is? You think markets are not realizing the potential of it?
So many factors are there, but gradually you see people have shown interest. It is going up. So coming days, all other factors will be taken care of.
And final question, how do you see FY25 for LIC being different from FY24?
Definitely there will be positive growth will be there. We are aspiring for double-digit growth in FY25, and we will live up to our commitment, whatever we have given post-listing. Definitely those will be achieved, and we are sincerely working on that. On all fronts, we are working sincerely.
So nice to have you, Mr. Mohanty. Thank you very much for your time.
Thank you, my pleasure. Thank you.
If you like this video, then like, share and subscribe to ET Now.